All right, welcome everybody. We're going to get started here at the top of the hour in just about 4 minutes. Thank you very much. All right, here we go. I'm going to get started. So good morning, good afternoon, good evening to everyone that has joined us today. Thank you for joining me today for our first webinar in 2020. This session is being recorded, so if you're unwilling or unable to be part of the recording, please drop off. My name is Ismail Nalwala. I'm the CEO of IOTAP, based out of the Washington, D.C. metro area. I'm planning to go for about 30 to 45 minutes today. My company, IOTAP, is a Microsoft cloud partner, and Work 365 is the application that we've developed on Dynamics 365 for cloud-focused and services companies looking to scale and grow their business. All right, with that introduction, I'll move in my first slide here. So, we've talked about subscription billing a lot in the past. I'm using these sort of 9 points in this series of webinars that we're doing to cover what I think are the most important and relevant criteria around building a successful subscription-based business. This list, I wish, was absolutely original, but it's adapted from a company that is a leader and a dominant solution provider in the subscription space called Zuora. I'm a fan of what they talk about, and we have adapted this and leveraged some of this. And so what I like to do is, go through each of these items and see how Work 365 addresses all these criteria, these 9 specific things that you should be doing in your business to build a successful subscription-based business, right? So what we've done, oh, sorry, let me go back here. Yeah. So what we've done is in the last few sessions that we've covered, we've talked a little bit about, measuring customer metrics, building and nurturing relationships using the capabilities in dynamic CRM and marketing automation tools. We've talked about how Work 365 helps with generating accurate and intuitive invoices. And today's topic is primarily around collecting cash fast, right? So how do you automate that process? What are some of the things you should be looking for? And I'll talk about that in my next slide here in the agenda. So this is really what I'll cover today. The need around payment processing and a billing automation system, right? What is the criteria you should be looking at when you're evaluating a system for payment processing? Some options that you have for payment processing systems. I'll give you a walkthrough of how this works in Work 365, and we'll look at a case study as well that I've actually been able to put together over the last couple of weeks, specifically for this session. All right. Okay, so the topic today is really collect cash fast, right? So why is collecting cash fast one of the key metrics and criteria for building a successful recurring business? I have a chart here that shows the types of billing frequencies we typically see in Work 365. So as you can see, more than 70% of the billing contracts and billing relationships that are set up in the system are monthly, okay? About 24% are annual and about 5% are quarterly. So hopefully if you're doing, if you've set up your billing relationships, you can benchmark yourself against this. This is the data that we have in our system based on, a wide range of users all the way from, the Far East to South America. And this is what we see right now. Right, so subscription revenue is billed more frequently, of course, right? Monthly billing is usually the most common way of billing subscription invoices. These invoices are going to be smaller in size than one-off invoices. Margins with resale, and everybody on this call, if you're a Microsoft partner, you are reselling hopefully something from Microsoft. And that essentially generates that margin. The margins are there, but they're tight. Now, when we talk about collecting cash fast, one of the things is, the longer it takes to collect cash, the higher the risk of collecting that cash, right? So you want to ensure that you're collecting that payment as quickly as possible. And of course, if you are looking at improving your financial metrics, these next three items are more financial in nature. So if your financial controller or CFO is the one that's showing some concern around certain business metrics, these are the things they're looking to actually address, right? Risk of credit, improving the cash flow, and reducing your DSO, right? You want to generate cash in the business as quickly as possible. Revenue and profitability are certainly important, but cash collection is the lifeblood of your business. And if you don't do that quickly, you could be in trouble. So DSO, this is really a measure of the number of days that your sales are outstanding. It's a measure of the average number of days that it takes a company to collect payment after the sale has been made. So with a recurring business where you're generating about 70% of your revenue on a monthly basis, that sale effectively is happening on a monthly basis. All right, so that's why it's so important. I'm going to do a quick poll here, just to see if we can get some feedback and engagement. So if you don't mind just quickly responding to this poll, that'd be very helpful for me. And I will also share the poll with the audience here. We'll give it about 30 seconds. I have only a few people that have responded. We'll give it a little bit more time. If this is a confusing question, I don't blame you. It's not something everybody keeps in the top of their mind. And okay, we'll give it another 30 seconds. I only have about half the votes in. Okay, all right. Well, I'm about to close the poll, so if you have a response that you want to submit, please do that right away. All right, I'm going to close the poll now. It's very interesting. Actually, sorry, I switched the screen here. I will share this poll. Hopefully you're seeing the results. So what's interesting is most people think it's about 30 days, and 50% of the people don't know what their DSO is. It's normal. Unless you've actually looked at it recently or measured it, you're not going to know. And 30 days is pretty good. Ideally, if you're doing monthly recurring revenue, you want your day sales outstanding to be under 7 days. You want to collect the cash immediately. All right, so let's talk a little bit about that. What does that mean? I guess the important thing around this is, as I mentioned, customer service is, customer experience rather, is really tied to this whole invoicing process. So let's take a look at how all this kind of ties into customer experience, right? Now, I have a whole bunch of systems listed over here. So we'll start from the left. You'll typically have an accounting system. This is where you should be measuring performance. Not operating the business functions really, but looking at how your business is tracking. You probably have a ticketing system. This is where you're tracking customer incidents, managing SLAs and entitlements. If you're an indirect or direct provider, you have a provisioning system, potentially from a distributor, or using the partner center directly if you're a direct provider. You're going to have a PSA system where you potentially track your time, and then a sales system, that could be ConnectWise or Dynamics. And then in some cases, we see that people have actually payment collection systems as well, right? So all these systems together kind of build your customer experience and, streamline processes and help you automate what you're doing, right? Let's see what happens in what I call a not so ideal landscape. So hopefully you're able to see my screen. I will make sure that, okay, all right. So this is typically what happens in certain situations, which, as the title says, is not ideal, right? You have a provider where you're provisioning the products. This could be Microsoft, this could be a third party, whatever, it could be your own products as well. These provisioning requests potentially get integrated into your PSA systems. And if you're not doing that, then it's a little more challenging. From your PSA system, you may be pushing in data into your accounting system to generate an invoice, and then you're collecting the payments out of that. Now, if you have different systems doing all these things and they're not tied together, you may set up a customer portal for provisioning. Now, this is, certain distributors give you this access. If you are a direct partner without access to your own system, you're probably provisioning directly into the partner center. You may have a ticketing portal as well for your customers. And then in some cases, if you're using a payment collection software, you're going to, I want to make sure. Can you confirm if you're able to see my slides now? You should be able to see my slides. All right. Okay. Let's take a step back. All right. This is the stuff I was talking about with systems. I had to reshare this, so thank you very much. So this is what I was referring to in terms of all the various systems that are involved in generating that customer experience, right? From an accounting system, ticketing system, provisioning system, PSA system, and potentially a sales system, sales automation system, and finally a payment collection system. I rolled into this slide, and the idea here was that there's a provider where you're provisioning products from. If you're a Microsoft partner that's reselling products, or even other third-party products, you're taking that provisioning data, putting it into your PSA system, rolling that PSA invoice or CRM invoice, rolling all that PSA data into your accounting system, generating an invoice, and then collecting the cash. Then what happens is you're going to enable, hopefully you're thinking about how you can provide access to your customers to do some of these things. Ticketing, typically you should have a portal for that. A customer ticketing portal is out there if you're using one. Some people use third-party SaaS products to automate the provisioning from Partner Center, or you may use a distributor's portal to do that. And then finally, a payment portal as well. So as you can see, there are multiple customer portals, multiple systems that are involved here. And this is what I was referring to as a not so ideal situation, right? So what's happening here, you have multiple logins and identities. Potentially each of these portals look different, right? You're compromising your brand identity. You have data in different systems. And then access to these specific systems is only limited to the few people that have specific roles, right? It's not a holistic sort of system where everything resides in a customer system. These are all customer data points, and they need to be in a customer system, right? So, taking all that and kind of boiling it down into what I would say characteristics of a good billing system. Obviously, I'm leading you to what I think is the ideal system and how Work 365 solves this problem, right? So what you're looking for is a system that has provisioning integration. It can bill and invoice accurately, right? So automatic refunds, proration, generation, creation of the invoice, integrations into the right system, especially for accounting. Payment processing. Ideally, you want automatic payment collection and a range of payment options, not just one specific type like credit cards. And then, as we talked about previously, things around collections and dunning. And, the foundation of a lot of this is really around security and the technology platform, right? Identity management and making sure that, you don't have people who are not supposed to access the system logging in. Maintaining passwords, managing credentials is a pain. There are great identity providers out there like Azure AD that hopefully you can use across all the customer access systems. All right. So this is where I was going with this whole thing. This is where we reveal that Work 365 helps you with all these aspects, right? I have purposely not included the GL and the accounting system in here because Work 365 can integrate into that. It's important to keep in mind that the accounting system or the GL is not how you operationalize your business, right? It's how you measure and track performance. So for those of you that may be new to Work 365, today I'd like to share some quick information. An introduction. Work 365 is a subscription management and billing automation platform that helps you scale your recurring revenue and subscription-based revenue. Work 365 is built on Dynamics 365 as a native application. So you're using all the capabilities of Dynamics 365, including sales, customer service, and PSA. It helps your sales team and your service team, along with your finance team, kind of collaborate and really do this well, which is go from quote to cash. That's the most important aspect here, all happening within one system. All right, so just a quick recap here. Best practices around getting paid fast and collecting money quickly. Have one system, consolidate your systems, use one portal because that's really going to build a better customer experience and take your brand and identity forward. Use automation around things like credit limit management. Don't reward bad behavior. Things like credit hold capabilities in the system are really important. Automating that is also possible, which means that, if a customer exceeds their credit, use measures to protect yourself, right? Those are some of the best practices I'd like to share. All right, now we're going to get into the actual payment processor stuff, right? I'm going to share another poll, and I'll be careful this time not to stay stuck on that poll result. Okay, we'll launch this poll. So if you don't mind quickly just responding to this, that'd be very helpful. All right, we'll give it another 30 seconds, if you don't mind quickly responding to that. All right, great. I'm going to close this poll. I'll quickly share this, and this time I'll make sure that I hide the results. There we go. It's looks like, some of the more popular options are authorized.net or actually not using anything right now or another product. Okay, well, good to know. So a third of the audience is actually not using an automatic provider. Well, that's great. It's an opportunity for you to fix that. All right, now you should be back on my presentation. Hopefully you can see the slide. This time I close the poll and the sharing. Okay, great. All right, so let's talk a little bit about, some of the digital payment options that you have. So some of you that are using authorized.net or some other payment provider may be used to and familiar with this, right? So the payment space is really hot, right? There's a lot more to payments than what I have here on the screen. And a lot of players are kind of getting into this. The main relevant ones for us on the B2B side are going to be basically the first few that I have there, right? Credit cards, bank transfers, and then of course, the check, right? The snail mail strategy. There are many others, as I said, including mobile payment options, electronic wallets, and prepaid cards as well. So what you want to think about when you're evaluating a payment processor, if you're looking to make a change, is a bunch of things around cost, ease of use, and convenience. I do want to mention that the bank transfers is actually kind of a unique thing. There's a few established standards out there that I've listed here. It's the Australian debit entry, ACH is what is used in the US, the New Zealand direct entry, SEPA is used in Europe quite a bit, and then the UK direct debit. These are some of the more well-established EFT processes that you can use. That's the electronic funds transfer, things that you can actually implement for your business. Now, what I want to talk about is, when you're looking at this, there's going to be fees, there's going to be costs and convenience, right? So for credit cards and debit cards, credit cards and even the bank transfer side of things, you're going to look at sometimes application fees and termination fees. These are important to kind of keep in mind. But more importantly is things like ongoing fees. Sometimes there's monthly minimum fees. There's going to be a gateway access fee when you're actually accessing a gateway like authorize.net. This is usually in the range of $10 to $15 a month, whereas certain merchant providers, credit card providers, will enable a gateway like authorize.net for you to collect the payments through the virtual terminal. And then, of course, there's going to be credit card fees like the interchange fees. That's the big bulk of the fees that you actually pay when you're processing credit cards. This ranges anywhere from 2.5% to like 3.5%, right? The benefit, of course, as we all know with credit cards, is that the money is available very quickly, in a day or two usually. And customers like to use credit cards because they feel like they're protected and they love to collect the points. Right. Now with the bank transfer side of things, it's a little bit different. There's usually a flat transaction fee. It's much lower and you don't pay by the volume of the invoice. These fees generally save you a lot of money if you're using bank transfers. And generally everybody you're doing business with should have a bank account, right? I mean, they all have bank accounts. However, there's going to be some resistance to sharing the direct debit. There's a perceived risk that, what if you charge something that I'm not comfortable with, right? The money takes a little bit longer to get into the bank, into your account. It could take anywhere from 2 to 7 days. So the most important thing is, you want payment options, right? Payments is not an all or nothing situation in the sense that if you pick one, it's not like you can't have the other options, right? It's a set of tools that you're going to use for your business. However, for specific customers, you will most likely pick the specific payment provider. So in certain cases, for a certain type of service, a credit card may be the best option. In certain other cases where you have a longer, more consistent relationship, the customer is going to be willing to use a bank transfer or an EFT strategy, right? All right, that will now switch to how Work365 supports this in the application. All right, so Work365, the version that's coming out right now, supports these three specific payment processors. There's the authorize.net gateway integration. So if you had a merchant account with your credit card processor, usually they will enable authorize.net gateway access. You can use this authorize.net integration from within the application to process credit cards right away. You don't need specific integration with that merchant processor, a credit card processor, right? Stripe is a very popular one. It's global. They have their gateway and a payment processor themselves. They support credit cards and ACH. And the other one is the Go Cardless integration. This is really a direct. This is really a direct debit, electronic funds transfer, and they support all the main EFT standards that I shared in the previous slide, right? The UK direct debit, ACH, etc., etc. So it started out in the UK as a UK direct debit provider, and then now they're available globally for you to use with your bank transfer using one of those standard EFT strategies. Right. So how does this really work? I'm going to share the application here with you and some screenshots that I have. So these are the three main entities that you're going to be looking at within the payment processing capabilities in Work365. There's payment processors, you create payment profiles, and then based on the collection and based on the automatic processing that you do through the system, payment transactions get created. All right. Now I'm just walking you through a typical process of setting up a payment provider. We're going to look at Go Cardless here. Go Cardless, you basically select the type. Um, Once you do that, there's this standard get consent process that we have in the application. You'll receive this page from within the application. You start the consent process. This is what that screen looks like. Once you go into the application, once you start the consent process, you'll be prompted with this screen. This is really now where we're integrating with Go Cardless, right? And you're going to have two options, whether you already have an existing account with Go Cardless that you can start to use, or you need to sign up. So you can sign up through Go Cardless directly from within Work 365. Once that sign up process is complete, the payment processor is set up in the system. All right. Now, one thing I want to make sure, I get this once in a while. I want to make sure I share this as well. This is how you will then collect a payment profile for a customer where you've set up the payment processor. Now, I'm looking at an account here called Coho Winery. I've looked up the payment profiles that are related to this customer. Currently, I don't have one, right? What you don't want to do is click New Payment Profile, right? The way to do this is really through the Work 365 menu, which is a drop-down, this colorful icon here up in the navigation bar, and you click on the Create Payment Profile. We'll go through the next step. It opens up a web form where you can actually specify certain details of who's going to be submitting that payment profile. It could be an existing contact or it could be a new contact, right? Continue to move through the screen here. In this case, I've selected Jim Glynn. It's an existing contact in the system. You can then enter the information directly, or most likely you're going to use the system to actually request the payment information from him. What this does is it prompts, it opens up this email send form, and you're able to send an email directly to that recipient with the specific link for them to create a payment profile without you actually having to take all that sensitive information over the phone. Right? This is the most recommended process. This is the best process to use. You can define your email template in the system, and the system will actually enable the send for you automatically. This is typically what it would look like. If I had sent that email, Jim Glynn gets an email based on the template there. There's a link in the email for them to click through and actually set up their entire payment profile. All right. Okay, now let's assume the payment profiles are all created. In this case, I have a couple of payment. This is what it would look like. You have active payment profiles in the system. And the way the system enables this automation is really through the billing contract relationship with the payment profile. I'm now showing you what an example of a billing contract could look like. In the lower part of the form, there's a section called billing automation. This is where you'd specify the payment profile for automatic collection. You notice it says auto charge here. You flip the flag to yes. It requires you to then submit a payment profile. In this case, I've used one of those Go Cardless profiles. The system's automatically going to use this payment profile because it's now set up in the system to charge the customer on the next invoice date. If this is a monthly recurring contract, every month on the specific date, the payment will be processed. Of course, because this is an EFT, the funds get received, based on the terms and conditions with the provider. Could be anywhere from 2 to 7 days. If it was credit card, it would obviously get processed and charged right away in the system and collected as well and debited to your account the next day. All right. Hopefully that gives you an idea of how the system works. There's obviously the ability for you to charge an invoice directly without using the automation. You could open up an invoice and then click through and charge an invoice, any invoice in the system using one of the existing payment profiles that you have for that customer. All right, so now we're kind of getting into the tail end of the presentation. I wanted to share with you some case study information that we've collected. One of the things I get asked a lot, and I talk to people that are thinking about using the application, is costs, right? Um, Now, I'm going to flip this around a little bit and say, what is it actually costing you to not have a system, right? That's the main thing. Certainly, there are costs that are included that get added on to your cost of doing business when you think about including payments and automatic payments and systems even that automate the process like Work 365, right? But these are the things you're looking at, right? What are um, your customers are going to want these capabilities from you, right? So we'll look at how a partner that's using Work 365 has been able to leverage the application, but you've got labor costs for doing all these things, provisioning changes, invoicing, payment collection, potentially reconciliation as well, right? And then, shrinking that DSO, very important, and collecting cash fast, right? So now with this, let's look at, um, actually, I'm going to flip to the next slide. That's a better slide. Let's look at that. Yeah. So I wanted to share this case study um, that, reflects some of the outcomes of using a billing automation system. Now, this is a partner that wanted to remain anonymous but was willing to share some of the data with us based on usage of the application for more than a year. This is all 2019 data, and they've been using the application, I think, for about 13 or 14 months. This partner actually receives $1 million invoice from Microsoft on an annual basis. They have about 180 customers nationally in the US, about 460 subscriptions in the system. They're an MSP. They sell a combination of Office 365 and Azure, and some other security and backup products as well. Now, the interesting thing you'll notice here is that they have a portal, and all the provisioning changes that have taken place in the system, let's say, well, here we go. Here's the chart. 78% of those changes were processed through the portal, which means the customer did this themselves. About 20% of those changes that have taken place over the course of the year were done through emails and phone calls. And only 1% of the changes were done directly through the provider, which is the partner center, right? So the idea here is that they were driving adoption on the portal and using the automation that it provides as much as possible, right? Not everybody does this, but this is that typical best case scenario where most of the provisioning changes have been processed through the portal. All right, so this is what happened. And keep in mind, all this data was only for existing subscriptions. We're not talking about new products, new customers that they acquired. What we looked at is the changes that took place in the system over the last year, right? So there were 805 license change logs that were processed in the system, right? You'll see some numbers here on the bottom. If you assume about 5 or 10 minutes to do this manually, that's about 67 hours. About 1,600 invoices were generated. If you are doing about 10 to 15 minutes per invoice, these are all automatically generated invoices. That's about 400 hours. There was about 1,500 payment transactions that were processed, okay? Automatic payment transactions. Now, if you are not using an automated system, this is a rough guess. It could take half an FTE, right, to do this. Now, the result of this was for them pretty promising, and which is why we're sharing it, obviously. They had $33,000 worth of monthly recurring revenue that was generated from existing customers that were already using their system, right? They've had zero loss, at least as far as they can tell, from a revenue standpoint, because all the provisioning is driven directly from the system, right? So the idea is that, there's a cost to the system, but this is the output. This is the outcome of using a system that can automate your billing, automate your collections, and automate your provisioning, right? This is pretty much what I had to share today. I'm going to wrap up here. I'm open to questions. We have about 5 more minutes here on the presentation. So If you have any questions, please don't hesitate to ask. Be sure to answer them if I can. Okay, no questions. I will wrap up this presentation. The recording for this presentation is going to be available on our YouTube channel. A couple of other announcements really quickly. We're doing a webinar next month on integrating with accounting systems, so look out for that. We're going to be at the UG and Extreme conference in Barcelona in March. So if you're there, would love to catch up with you and meet you there and talk about how things are going. All right. Thank you very much.